and I just keep adding it up, making money today, making money tomorrow, making money the next day. Every time we do it, just continuously making money and avoiding issues and not trying to be greedy with the trade. And what I want to kind of talk about is what are the kind of things I'm doing to consistently win with this 1DT strategy. How have I went 28 straight trades without losing? Now, I do consider adjusting, and if I adjust and I win afterwards, I do consider that a trade that's won. Okay? If I adjust and then I get out of the trade and I have a net debit, or it's a net loss, then that's a loss. But the way we trade options, you guys, is that if we sell something and we have to adjust it and we adjust it for a credit and then we later win on it, that to me is all one trade, and we've won on the trade. Most of the time with this 1DT strategy, we're in and out of it without having to adjust. And the super majority of the time, that is the case. So out of the last 28 trades, we've probably had to adjust three of them. And so if you take three and you divide it by 28, it's about 11, just under 11%, 10.7% of the trades have had to adjust, and that's not bad, right? That's not bad. I do predict that sometime it's going to be more than that. That's just obvious. But usually it's no more than 25% of the time we're going to have to adjust those 1DT trades. And but the way I've been perfecting this 1DT trade by the time frame that we put it on. Right? So we put the trade on no sooner than 15 minutes to the market closes. Most of the time we're getting filled like 5 minutes to go, 3 minutes to go before the market closes, and we're out of the trade within 30 minutes of the market open. So if the market opens at 9:30 Eastern time, we're exiting that trade by 10 a.m. Eastern time. And we're exiting that trade even if we do not hit the profit target that we want, as long as long as it's a profit after fees and commissions. So normally the profit target we want is 50 to 70%. And if we can get that within the first 30 minutes, then great. Right? And a lot of times that's going to happen. You're going to get 50% right when the market opens, or you're going to get 50% 10, 15 minutes after the market opens. And sometimes you'll literally get 70% right when the market opens. But most of the time, if you're going to get that 70%, you're going to have to wait about 15, 20 minutes after the market opens before you get that. But it's possible, and it's not rare. Recently, the getting the 50% has been a little bit more challenging. The option's been keeping the premium more, but we have still won 28 straight times. And so for me, I'm okay with taking 30%, as Ranjit was just talking about. I'm okay with taking 35, 40%. I'm even okay with taking 15% if that is more than break even, if I made some type of profit within that time, just to avoid any issues, right? The less time I'm in the trade, the less issues that can happen to me with the trade. And I just keep adding it up, making money today, making money tomorrow, making money the next day. Every time we do it, just continuously making money and avoiding issues and not trying to be greedy with the trade. To me, being greedy is that I set the trade up and I'm dogmatic about I'm going to get my 50, I'm going to get my 70%, and I'm going to hold it until I get that. Well, to me, that puts more risk in on the trade because you're in the trade longer. The longer you are in these short-term trades, the more things that can happen, and that's just common sense. But if you're okay with saying, all right, I'm just going to take this win, the next day I might get 55%. Like today, right? Today we got 55% without any adjusting, without any issues. We got the 55%, and it was before the 10 a.m. Eastern time. Nice little trade. The market behaved as Dr. Meadows like to say, and we were able to get that profit. Last week, I think we only got 50% one time, and we had to get 30%, we had to get 20%, 25%, 35%, things like that. And that's okay. It's still a win. You're still adding up money, you're still getting experience, you're still staying engaged with these markets. That is why we went 28 straight, and why we've set that arbitrary goal 28 trades ago, that we're not going to lose, or we're going to try not to lose anymore on this 1DT for the remainder of this year. Right? So we got 3 more months. We got one more quarter to go through to see if we can do it. We all know we can do it with the 70T trade, right? To me, that's that 70T trade. We call it print money. for a reason. That to me is really, really, I'm not going to say easy, but it's a lot. It's a lot more straightforward, and you can go long periods of time without losing. The 1DT trade is you have a little less control, but the way we teach it in the 1DT course is that we give a lot of the control back to you, right? And that's how you put the trade on, and that's if the trade goes wrong, how you adjust that trade and what steps you take to adjust that trade. So you already have the plan. It's no ambiguity, it's no uncertainty, it's no fogginess. You know exactly what to do after each problem occurs. And if you follow that course to the T, you learn it as if you had to teach it. And if you can teach it, then you learn it, you know it well enough, and then you can continuously make money. We've demonstrated it, and we're going to continue to demonstrate it because I'm going to follow the course to the T and make sure that we're not deviating for it, so we can believe that it works consistently for us. To me, it's no question about that with the 7DT trade anymore. That uncertainty is completely gone. But I want to go, a half a year, and that's what it's going to be if we or something very similar to that, if we can go in another 3 months without losing on that 1DT trade. Go a half a year without losing. That to me tells me I have the control. I have the ability to manipulate the trade well enough to be able to win in all the type of conditions that we're trading in. But just like that 7DT trade, we're not trading in conditions that we know that are bad, right? Why would I go try to drive in a blizzard? It doesn't make much sense to me. I'm going to avoid that so that I can potentially avoid having to, skid off the road or hit some other car hits me. If it's a clear potential danger, doesn't mean I'm going to hit another car or speed or skid off the road. But the probabilities are higher then. So why put myself in that situation? That is how I think, and that's how we should all be thinking when we're trading. Not only just these short-term type of trades, but all the type of trades we do. We want to avoid making it hard. So Raj was just talking about he's found a few underlinings that he likes to trade, that he has a rhythm with. He has the cadence of those underlinings, and it gives him confidence he can trade it. Well, to me, that's simplifying the game. That's making the game simpler. You're not trying to complicate it. Trading doesn't have to be complicated. You want to make it as simple as possible. The old adage, keep it simple, stupid. And that's definitely my philosophy with these short-term trades and trading period. Earlier this morning, Lisa was asking about, do I trade any other bread and butter things besides the ES? And I said yes, but I primarily trade the ES. I'm trying to make it easy and simple for myself. So with this one day DTE trade, you can control when you put it on, right? And that's important. We look at economic data, making sure nothing's coming out tomorrow that's going to potentially hurt us. I've already did that, so we can go to the next step. And so for me, what I like to do is look at the VIX and do the rule of 16. Right? So if the VIX was trading at 16 and you divide it by 16, that means it's going to, if the expected move, the two standard deviation expected move is about 1%. And so you can call it semantics. It's trading a little below 16 right now, but I just say it's 16 and just keep that 1% as the gauge at this point. Once I take note of that, I then do the straddle price. And this is uniform, regardless of what platform you're on, that provides you the expected movement and implied volatility and all that. The straddle price is going to be the same. If we all do a straddle price at the 57.20 strike here, it's going to give us this 24. I'm going to round that up to 25. So we're going to take the 25 and we're going to times it by 2. That's going to equal 100. only in only in some poor math, right? So that's going to equal 50. It's going to equal 50. And what we're going to do is take that 50 and we're going to add it to that last number and we're going to subtract it to that last number, that 57.18 here. And so if I take the 57.18 and I add 50 to it, that's going to take us to the 57.68. So I'm going to go over there around the 57, let's just say 57.65. Let's say it's a 5 delta, right? Because you don't have a 57.68. So I'm going to go with the 57.65. On the 1DT trade, we normally do a 20-point wide spread. So I'm going to buy the 57.85. That's giving us $45 on the call side. If I take that 57.18 and I minus 50 from that, that's going to take me to 56.68. So I'm going to go around the 56.70. So if I go to the 5670, that's a 9 delta. I do not want to be higher than a 10 delta, and I do the 20-point wide. That's giving me $135. I'm at a 5 delta on the call side, and I'm at a 9 delta on the put side. I can keep it this way if I wanted to, right? And I can say, I believe this market is going up tomorrow. I want to get a little bit more premium. I can do that. Or I can manipulate the strike sum and see, I'm trying to get at least 100, but we will take less than that from time to time. And I talk about that in the course. But in this example, if I move this down to an 8 delta, that's still giving us 120. If I move the put side to a 6 delta, that's still giving us 105. If we can get 110, then that would still give us at least $100 after fees and commissions, as you can see here. Right? So that works. And now we're at a 6 delta on the put side, and we're at a 5 delta on the call side. And we're two expected moves away, or two standard deviations away, and we can count on this potentially working for us. So, but it's still about 6 minutes left before the market closes. This is showing Central Time, but that's the same for Eastern Time. It's still 5 minutes before this market closes. And so if I can get this 110, I'm going to take this trade. I'm going to give it about 2 minutes. And then if we don't get the 110, then I'm going to change the trade a little bit. And I'm going to change it on the put side. I'm a little bit more bullish. I do not think we're going to drop a ton over the next, or at least tomorrow. That's all that matters for this 1DT trade is tomorrow. That's what I care about. I want to get out of this trade tomorrow. And so if I'm trying to structure it as best as possible, what I deem doesn't mean it's going to be correct, but I have to do my best with my assumptions and the probabilities that I'm setting this up with. And if I can get that trade like that, then I'm going to take it and hopefully win. And if I don't win, we already have the process of how we're going to adjust it so we can win. It's no, once again, like I was saying earlier, it's no ambiguity with this 1DT trade. We have all the steps we're going to take. Even if we wake up tomorrow and we're in the money, we know the steps we're going to take, and we talk about it in the course once again. You do not want to do this trade without learning the system, the apparatus of this trade. If you do not, it's going to put you in some bad situations, and you can have some outsized losses, just like with any type of strategy. But I want you to avoid that. I want you to be able to trade this with confidence and trade it with consistent success. Okay. All right, so I said I'm going to wait about 2 minutes. I think I yapped for at least a minute. If we go and look at this right now, the price is saying 110, excuse me, 104. That's the mid price, and we're trying to get 110. So it would probably have to go down a little bit more, or go up quite a bit, and the call side gets more premium in it. But what I'm going to do is just move the put side just a little bit. Okay, so I'm going to cancel this now. We still got 4 minutes to go, so we probably can get filled, but I'm going to cancel it now for demonstration purposes. And then, and I'm going to do a similar order. That's how you have to do it on TastyTrade. I'm going to keep that call side where it's at. We were at 57.60 when we did the 1DT trade for Friday, which is technically a 3DT trade. We was at 57.60. We're going to go with the 57.65. I think we could go higher than that, but I just see 57.18 plus 50. That's going to take us to 57.68. So that's where we were at. And I do think we might go higher. So let's just see if we put this put side here like that. That's giving us 120. That's not bad. Let's see what happens if we move this call side a little bit to the 57.70. That's giving us 100. And let's say we get a little more aggressive with that put side. What is that? That's 30. That's 48 points away on the put side. If we did that, that would still give us 125. We obviously are leaning a little bit more bullish there, and betting that this market might try to go to all-time highs again tomorrow. So I'm gonna try this. If they give me 125, then we'll do it. And I'm obviously a little bit more aggressive on that put side than the call side, but we will see here in a second. I'm gonna give it about 5 seconds, and then we're gonna adjust this again, and then go from there. So I'm gonna go 1,000, 2,000, 3,000, 4,000, 5,000. They didn't give it to us. I'm gonna hit replace order, and I'm gonna drop this down to 120, and then we're gonna see if they fill us there. So it looks like they're not giving us that either, as this market kind of goes up a little bit. So I'm not going to move that put side up. I'm not going to move the call side. I like that call side at the 57.70, just in case we have some type of runaway up move. And I just don't think we're going to have a big down move. And that's, but that could happen, obviously, right? That's why we went on this iron condor that we set up. You can win on both, obviously lose on both sides, and you win if it stays in between your short strikes. And that's what we wanted to do. All right, so we're not getting filled. We got about 2 minutes before the market closes. I'm going to drop this down to 115, and then we most likely going to get filled. A lot of things can happen in the next 2 minutes. We can drop a lot, and that would be to our chagrin because we did put our put side at a 9 delta, or we can go up a lot. We got a little bit more room on the put side. I'm on the call side. We are 48 points away on the put side, and on the call side we are, what is that? 57.70 minus the 57.18. We are 52 points away on the call side. So that's how we set it up. We just got filled, and we got filled for, let me see, what is that? 115. And that's what we're going to put in Discord here.